Morning, students. Morning, everyone. We were doing property, plant, and equipment AS10 in the last class, and we'll do a quick revision. Anyone who remember what we discussed? I think I gave you two problems also today, if I remember. Did you all do them? Two problems from the practical questions, which are relating to cost. Yes, anyone? Who will start the revision? No one is ready to do it. Yeah. Yeah, Aditi.
Good morning, ma'am.
Good morning.
Ma'am, PPE is an tangible asset which comes in non-current assets which we hold for more than 12 months, which is held for the production or the supply or to rent to others or for the administrative purpose, and then it is to be expected to be used for more than 12 months. And for the recognition part, uh, for the recognition part, so ppe is recognized that from the if it has a probable future economic benefit, which will be there for the enterprise, and it the cost can be measured. And
It's a
also,
cost?
no, the cost of the ppe should be measured.
Reliably.
Yeah,
Okay.
reliable. And also pp uh, uh, is not applicable to the biological assets except
Mm.
the bearer plants, and also to the wasting assets it is not applicable.
Okay.
And what more things? Yeah, ppe helps, no, one second. Yeah, bearer plants is done, recognition is also done. Then yeah, ppe is measured. It can be measured at cost model and also at revaluation model.
When will you change to revaluation model?
After 1 year, when we want to revalue our assets ppe.
Hmm. Can you
And
revalue every year? What is the
ppe,
frequency of revaluations? Do you remember that?
yeah, ppe can be revalued every year if there are what do we say, yeah, if there are volatile changes.
Volatile changes, right?
Yeah,
Yes.
if there are volatile changes, like there is a frequent changes in the pp. So in every year we calculate the fair value, and we know want and we get to know the revaluation gain or loss. There will
Hmm.
be an annual revaluation over there. And also,
Okay.
if there is no insignificant changes in the pp, so we don't need to find the revaluation not every year but only once in every 3 or 5 years, uh, in which we do the entire class. We do for the entire class of the ppe.
Right. So you can't do it for individual class. I mean, individual assets. If you're doing for one asset, the entire class of that asset revaluation have to be done. Right. Okay. Good. Anyone else? Anyone else? She almost covered, but a few other things are also there. Anyone else who wants to take it up? Sridhar, are you there?
Good morning, ma'am.
Good morning, Sridhar. Sridhar, I just wanted to ask one question. You remember about the income that is earned during the development of PPE?
Capital expenditure, ma'am.
Income that is earned during the development of PPE. Not asking about the cost and all. If it is income that is earned in between, the development of PPE and all, we had two options. What were those?
Cost model and recognition model, revaluation model.
That is for the initial and subsequent recognition. But I'm talking about the income. What do you have to do with that income? Anyone else? I talked about this income earned during that development of PP. If you remember, when a PP is self constructed, you might have other income coming up in between. So, what do you have to do with that income? We discussed there are two options of recording such kind of income. What are those? Anyone? Okay. Nalakshmi.
When there is a direct um, relation in generating that income,
Be a
we
little
will.
louder, huh?
Am I audible, ma'am?
Little more louder. Hmm. I'm talking about the income. You understood my question, right?
Yes, ma'am. When there is
Yes.
a direct relation in the generating the
Hmm.
income,
Hmm.
then it will be added to the asset, means in the balance sheet. If not, it will go to the profit and loss.
Added to the asset itself, it means added to the asset means what?
Asset means,
Cost of the PP, right?
ma'am,
To the cost of PP, right?
yes, to the cost of PPE. Otherwise, it
Yes.
will go to the profit and loss income set. That's
Otherwise, it should be
profit and loss. It goes to profit
it
and
should be
loss.
shown as a normal income in your
Normal
P&L
income is
statement. If
other
it is
incomes
directly
like
attributable income, then what do? You will have to adjust it in your cost of
adjust.
PP. It will give
Yes,
you a reduction of your cost because it is
yes.
income. It will be a reduction to your cost.
Mm.
Okay. Anything else that we discussed? I think
And
we also had this exchange of assets. When you have exchange of assets for non-cash consideration, I think there also we discussed two different cases. What are those? Others also can
non
speak up. Nakila, you want to? Yes, Akila. Mohan. Yes, Veerashri.
Yes, ma'am. Am I audible, ma'am?
Yes, yes. Tell me.
Uh, we have two cases if for acquisition of assets for non-cash or partly cash. It is
Hmm.
commercial has no commercial substance and commercial substance.
Yes, yes.
In commercial substance, assets of similar value are exchanged, and in non-commercial substance, assets which are not similar are exchanged. Like if car and machinery are exchanged, are not similar assets.
Also, there is a word I used, if you remember. It should give you more economic benefits. Right. If it is
Yes,
giving you more economic benefits, then it says that it has some commercial substance. But if it is not giving you, that means it is not going to have a commercial substance. That's also one thing you have to see. You just not have to see only about the car to car or car to machinery, but also the reality of how the benefits are coming out after the acquisition is done.
yes, ma'am.
So what is the treatment?
And if it is a transaction which has commercial substance, first we have to see the face value of asset given up. Uh, if we
Face
don't
value
have
or fair value?
fair value, ma'am,
Fair value, right? It is not face value, fair value. Yeah, fair value.
of the asset
And
given up. If we don't have that, then we will see the fair value of the asset which we've received.
okay, good.
So if we don't have that information, we will see the WDV of the asset given up.
Right, right. So it should go in order. The priority will not be, I mean, the priority will be given first to the fair value of asset given up.
ma'am.
Correct?
Yes,
Yes.
ma'am.
And in case there is
Uh,
no commercial substance, what will you do?
we will see the WDV of the asset given up, ma'am, in that case.
Okay, good, good. Okay, right.
Yes, ma'am.
And what about subsequent expenditure? Anyone? Subsequent expenditure. So when we talked about initial recognition, we saw the cost model, what are included in cost and all that we have seen. But when we came to the subsequent expenditure, can we capitalize the subsequent expenditure, or should it be expense to P&L statement? That we had a chart also, like different conditions. Anyone? Yes, Sridhar.
Regular or day-to-day repairs or maintenance is treated as a P&L
Okay.
expenditure, and increase in the life of efficiency, that
Hmm.
is replacement of inspection parts or any uh, major overhaul, then is treated as capitalized.
Hmm.
Old part plus new part depreciation, then cost of the value.
Now, what is that exact format that we used? If you remember, when you're capitalizing, how do you do it for major overhaul expenditure or major replacements that are done? How do you record for? There's a format that we have discussed, WDV and all that. Do you remember that?
Cost of new part uh,
Hmm.
minus uh,
Hmm.
WDV of old part.
Old part. Okay, that will give you your revised WDV. Right. Right. Okay. Anything else that we discussed? Hmm. I think we covered almost all of them, right? Okay. Okay. So I think we covered almost everything. So it was all about definitions, the recognition criteria, then how do you measure it? When you're measuring, we have seen cost model and revaluation model. In cost model, we know what are included in cost. Some are excluded also. And in revaluation model, we will have to see how to revalue, when to revalue, the frequency we have seen. And I think if there is an increase or decrease, what to do. That part we will do it today. Okay. So other than that, I think we covered about the revaluation model and subsequent expenditure, what to do with the subsequent expenditure. All the subsequent expenditure will not be capitalized. There's with a condition that if it is increasing the efficiency or the life of the asset, then you can sorry, then you can capitalize. Otherwise, it will not be capitalized. It has to be expensed to your P&L statement. We have seen that. I think other than that, we have to do the revaluation part. Revaluation, if there is an increase or decrease, what to do with that, that we will see today. Okay. So frequency we know. If it is having volatile changes, then you will have to do the annual revaluation. If there is very insignificant changes in the fair value, then you don't have to do it annually. You can do it thrice or 5 times, once in 5 years. Also, you can do that. That is one thing we have seen. Now, this is what we will have to see. This chart is something which is important to know. Wherein, if you have an increase in the revaluation or decrease in the revaluation, how do you account for this? This I am going to explain to you using an example. Let us go through this through an example. I hope you all can see my whiteboard. Okay, okay. Yeah. So in this example, we are going to take a carrying amount of 1 lakh. Okay. Revalued amount is 70,000. Now, do we have a revaluation gain or revaluation loss in this case? Is it a revaluation gain or loss? My carrying amount as on today is 1 lakh and revalued amount is 70,000. It is a loss of how much? 30,000. Everybody agrees to this, that we have a loss of 30,000. Okay, good. Right. This is one case, right? Now, in this case, how do you do the accounting treatment? The standard says when you have a decrease in the value due to revaluation, this is decrease due to revaluation. This decrease has to go to P&L account, right? What will happen to this decrease in the revaluation? It will go to your P&L account as a loss, right? This is one thing. Now, this is with an exception. This comes with an exception. What is that exception is? Now, in this is, let us suppose this is year one. Okay. In year one, you had a carrying amount, you had a revalued amount, you had a revaluation loss also. Now, next year, when you come down to year two, for the revalued amount is 95,000. Is it a loss or gain now? Is it a loss or gain now? This is a continuation question, so you have to see both the amounts together. How can you say it is loss or gain? How did you compare this loss or gain? Anyone? Someone unmute yourself and then okay, Harshit, tell me.
मैम गुड मॉर्निंग
Morning.
मैम जो रिवैल्यूड अमाउंट है उसमें
Hmm.
से हम जो अभी सेकेंड ईयर की रिवैल्यूड अमाउंट है वो डिडक्ट करेंगे देन वी गेट अ लॉस ना
Hmm. How much
मैम
is your loss?
या हाँ एंड कैरिंग अमाउंट में से भी माइनस करेंगे तो भी 5,000 का लॉस होगा ना
कैसे? How did you get 5,000?
ओके मैम
How
ओके
did you get 5,000?
फर्स्ट ईयर का जो कैरिंग अमाउंट है लास्ट का वो 70,000 है राइट मैम
Hmm.
देन वी
Yes.
डिडक्ट फ्रॉम ईयर 2 का रिवैल्यूड अमाउंट
Hmm.
देन वी गॉट अ प्रॉफिट
Of how much?
835 25,000 का प्रॉफिट मैम
Then you were saying 5,000 and all.
मैम आई एम कंफ्यूज कि कैरिंग अमाउंट लेना है कि रिवैल्यूड अमाउंट लेना है
Revalued amount only have to be taken. Okay. Now this
Okay.
carrying amount will become nullified. This will become nullified once the revalued amount comes into picture. Once revalued amount is coming up, this will be carried further to the next coming years. So this value will not be there. Once the revaluation is done, you cannot see this value anymore. What will be the value that will be existing in the books of accounts will be only 70,000. Right? So what
Right.
is the value you have in your books of accounts right now? The carrying value is only, that's why I didn't write. If I write carrying amount, you all will answer correctly only. That's why I didn't write. Now, what is the carrying amount in year two? It is 70,000 only. It cannot be 1 lakh anymore. That 1 lakh is gone. Only 70,000 is there in your books of accounts right now. Okay. So
Yes,
this
ma'am.
carrying amount, yeah, unmute yourself, no? So this carrying amount now is 70,000. And I have revalued my amount or the asset to 95,000. Now, is it a gain or loss? It is a gain of 25,000. Okay, this part is clear. So in year one and year two, generally what happened is 1 year it was a loss, 1 year it was a gain. The standard generally says if you have a loss, you take it to your P&L statement. And if you have a gain, you will have to show it under revaluation surplus. Where will this revaluation surplus be? I told you this also. It will go to your owner's equity. It will sit in your owner's equity, right? So If you have a gain, it will go to revaluation surplus. Yes, capital account of the owner, you're right. So if it is a gain, it will go to revaluation surplus and it will sit under your capital account of the owner or the equity of the person. If it is a loss, it should go to P&L statement. But there is an exception to this rule. Now we are going to discuss that exception only. What is that exception is? In this case, what happened? We had a gain, but in the last year, it was a loss. Yes or no? It was a gain this year, in the current year, but it was earlier a loss to me. So the standard says when earlier in the previous years, if you have occurred any loss, that will have to be adjusted first, and then only the remaining part can go to your, remaining portion can go to your revaluation gain as a surplus. So first thing what we have to do is, out of this amount, what we will do is we will take it to P&L statement only first. Okay, 25,000 has to go to P&L statement. How much is the loss we had earlier? The earlier loss was 30,000, but now you could recover 25,000. No, 25,000 could be recovered in this year, because last year we had a loss of 30,000. It was sent to P&L statement, but this year when you could have a gain of 25,000, cover that 25,000 and send it to P&L statement. Don't send it to revaluation surplus account. Send it to the P&L account first. How much ever loss you could recover. I could recover 25,000 loss, so I will send this 25,000 to P&L statement, right? Do I have any other gain left with me? I don't have any gain left with me, right? But I still have 5K loss left with me. That's it. That will be there. We can't change that because it was a loss already recognized in P&L statement. That 5,000 is still not recovered, but this 25,000 is recovered. So this will be sent to P&L statement, right? Now I'll tell you one more case. In year two, in year two, so is this a revaluation gain or loss? Loss of how much? Or gain of how much? Some are saying loss, I don't know. If you're saying loss, please tell me why also. Sridhar, unmute yourself. Why loss, Sridhar?
मैम लॉस आएगा मैम
Why loss, Sridhar?
1,10,000 रिवैल्यूएशन अमाउंट है तो डिडक्ट करेंगे 70,000.
So how will you calculate revaluation gain or loss? I clearly told you. You will have to check what is there with you in your books of accounts. Whatever value you have in your books of accounts is carrying amount. Revalued amount is the value that is coming up to you because you have revalued the asset. So you will have to compare carrying amount and revalued amount. But I think you are doing a reverse thing. So here the revalued amount is 1,20,000, which means in my books of accounts, I have 70,000. But in the market, the asset is having a worth of how much? 1,10,000. So is it a gain or loss to me? Is it a gain or loss to me?
गेन मैम.
Gain. Now you agree, Sridhar?
यस मैम.
Okay. So this is a revaluation gain. Most of you told gain, so I agree to that. But few people told loss, so I'm worried. It is not loss, it is a gain of 40,000, right? Okay, great. Now just look at this. Forget about this situation. Forget about this situation. Okay, this is now not there. Earlier, what happened in year one? We had a loss which was sent to P&L statement. And in year two, what happened now? We had a gain of 40,000. Are you all clear with the situation? Earlier in year one, we had a revaluation loss of 30,000, and year two now we are having a revaluation gain of 40,000. So now what will you do is you will split it up. Okay, you will split this gain of 30,000 in 40,000 into 30,000 and 10,000. What is this 30,000? This will go to P&L account, and this will go to revaluation surplus. Is this clear? Is this clear? Yes? So when you are having more gain, what you will do, to the extent of loss that we have recognized earlier, you will have to take it to the P&L statement. Remaining, you can take it as a gain to your revaluation surplus. Are you all clear? Any questions in this example? Two different cases I have discussed here, wherein one case it was earlier, both in the year one you had loss, which was sent to P&L statement. But in year two, what happened? You had a gain. So the gain, whatever you had this year, can be adjusted with the previous year's loss. So to that extent of gain we have had, we will send it to P&L statement. It is nothing but just adjusting my P&L statement. I can't go back to the last year and change my, P&L statement. So what I will do in the current year's P&L statement itself, I will show this gain so that at least it will have a balance of last year and this year. Last year's loss might be adjusted with the balance of this year's gain. But I can't adjust entire amount. Sometimes it is possible to adjust. That is what is the second case. In the second case, what happened? I was able to adjust the entire loss. I had more gain, so to the extent of loss I had, I completely adjusted in my P&L statement. Still, I had more gain. I will send it to my revaluation surplus. Clear? Yes, Aditi?
Ma'am, I wanted to ask that where this 5,000 in the year two in the first case will go.
Where will it go? It already is in. It is already in P&L statement, no? The
So,
first year it says 30,000 was sent to P&L statement, no?
yeah.
In the second year, how much gain you had? Only 25,000, no? So entire 25,000 will go to P&L statement. This is not there. That 25,000 is only there with you. See, last year you had a loss of 30,000, which you sent to P&L statement. So 30,000 was entirely sent to P&L statement, no? Are you there? Aditi, are you there? Unmute yourself, Aditi.
Yes, ma'am.
Tell me.
Yeah, the whole 30,000 has gone to P&L
P&L
statement.
statement. This year you had a gain. How much gain you had? Only 25,000.
25,000.
So entire 25,000 you will send it to P&L statement. You don't have anything extra, no? Whatever amount you have,
Yeah.
you are sending it to P&L statement. Yes or
Oh,
no?
okay.
I was just saying that that 5,000 loss is still there. That's it. It's a
And
fixed
ma'am,
amount.
okay,
Hmm.
in the second case, in that 40,000 case, the
Yeah.
10,000, the surplus will go to
Hmm.
owner's capital account.
Yes, owner's capital, right.
Okay, fine.
This will go to owner's capital. Suppose this revaluation gain was 50,000, then how much will go to owner's capital? 20,000. As this amount keeps increasing, the gain that goes to owner's capital also will keep increasing. That's it. Okay. Now I will take a reverse example. This is an example wherein in year one you had a revaluation loss, and then in year two you had a gain. So how did you adjust is what we have seen here, right? Now we will take one more example. So this is a revaluation gain or loss. How much is the gain? 20,000. Okay. Everyone is saying 20,000. Okay, good. You all understood. No, I thought you will say it is a loss of 20,000. That's why I asked. So it is a gain of 20,000, right? When revalued amount is more, then it is a gain. When revalued amount is less, then that's a loss. That is one main thing you can, remember. Right. Now, in this case, it is a gain. So what should you do with this revaluation gain? Generally, what is the accounting treatment with this revaluation gain? This should go to revaluation surplus, owner's capital. Okay. In your balance sheet, right? Agreed. Okay, everybody got it. Done. So in today, what happened? We had a revaluation done. We had a gain. Since it was a gain, we have sent it to revaluation surplus and then owner's capital. It was taken to the balance sheet in the owner's capital. Very good. Now let's go to year two now. In year two, what happened? Now, what is your carrying amount? Now, what is your carrying amount? You can't say the carrying amount is 1 lakh anymore. Your carrying amount will be how much? 1,20,000, because this is a continuation. Year wise, since it is a continuation, your carrying amount now will be 1,20,000 only. Okay, yes, very good. Now I am assuming my revalued amount is 90,000. So is it a revaluation gain or loss now? Loss of how much? 30,000. Okay, very good. Yes, you all are right. So now in the second year, what happened? Now I have a revaluation loss. The standard generally says what? If you have a loss, it should go to P&L account. If you have a loss, it should go to P&L account. That is what the standard says. But with an exception, like I told you, how we had an exception before. Now also you will have an exception. You will have to check if previously it was a loss or it was a gain situation. Previously it was a gain situation. We had a gain in the last year previously. So this amount have to be adjusted first. Only then you will move the remaining portion to the P&L statement. So how much was the gain we had last year? 20,000. So now this 30,000, you will have a breakup. This will be adjusted from revaluation surplus account and this will go to P&L statement. Okay, this will go to P&L statement. It is simple, like how we have done the previous example. The logic is simple. The logic is very simple. If you had a loss now, previously if it was a gain, this loss can be adjusted with that gain first. Anything extra or anything remaining have to be accordingly treated. Only thing you have to remember is anything extra loss will go to P&L. Anything extra gain should go to your revaluation surplus. That's it. Nothing more than that. But exceptional rule is what? If you have a loss, P&L. If you have a gain, revaluation surplus. We know that. But exceptional rule is to check for what happened earlier. Earlier, did we have a loss? Or earlier, did we have a gain? That is what we will have to check for. Clear? Is this example clear? Yes, Anil?
Good morning, ma'am. Like in the previous example, in the
Yes.
year two,
Mm.
uh, case one, like
Mm.
it is a gain, right? Like we need to post in a revaluation surplus, right? Like why you are posted in P&L, ma'am?
Are you there in the class? As that is what I told, na. I mean, I was telling you, if you had a previous year loss, that should be adjusted first. Okay, out of the gain today. Okay, I'll tell you in a different kind of an example. Suppose,
Okay,
last
okay. You just nullified the previous year loss, right?
loss. Yes, that's it.
Actually, I
Previous year.
joined late. That's the issue.
Okay. Since I had a loss
Previous year loss first be nullified, then
remaining amount will
we'll
go
be
to
sending the rest of a part to
To the
revaluation gain.
surplus, right? Yes.
Okay, ma'am. Thank you so much, ma'am.
Yeah. Yes, Dhanlakshmi.
Ma'am, this losses, for how many years can we like
I
set
mean,
off, ma'am? Adjust?
we had year 3. Again, you had a gain, let's suppose. We did not adjust 5K ka loss, na? That you
Yes.
adjust. And remaining, you send it to revaluation surplus.
Okay. There is
Like
no
whatever
limit of
loss.
years.
Sorry?
Years. There is no limitation for the
Not
years.
like number of years or so. Till whatever extent you can adjust your loss, we can do it.
Okay. Okay. Thank you. Thank you.
Is this okay? I did write journal entries. Let me also write journal entries. Now, when you have a revaluation loss, what will be your journal entry? Your machine account has to decrease. Yeah, whatever is the asset or machine or building or whatever it is, that asset ka value has to come down, right? So, what will you do? Asset credit, and what will you debit? P&L account. This is the first entry that you will post 30,000 in year 1. This is year 1. Now, in year 2, what will you do? Year 2, what is the journal entry? You have already reduced the value of asset by 30,000 and the loss you have sent it to P&L statement. Now you have a gain, right? When you have a gain, but I still told you, you can't take it to revaluation surplus. It has to go to P&L only, right? I was writing a second. $25. So, since I had only a gain of 20,000, that gain I'm sending it to P&L statement. I can't take it to my revaluation surplus. Okay. And in this case, what will be the journal entry in year 2? In this case, my machine account, okay, asset account. My asset account should increase by how much? 40,000. So it should increase by 40,000. And what will I credit? I will credit P&L statement. P&L statement by how much? 30,000. And I will also credit revaluation surplus account by 10,000. Right? My asset value is increasing by 40,000, but I will take 30,000 to my P&L statement to adjust my year 1 ka loss, and remaining extra gain, whatever I have, I am sending it to revaluation surplus account. These journal entries are clear? Are these journal entries clear? No questions here, no? Very simple. It is just that you have to see what happened last year. What are we going to do this year? That's it. Accordingly, you will do the adjustment. Great. Okay. Now, in this case, what will be the journal entries? Anyone can tell me year 1 mein what is the journal entry? Yes, Nisha.
Ma'am, asset to
Asset is
revaluation,
debited. Yes, and to.
revaluation surplus.
Okay, very good. How much is the amount?
Ma'am, 20,000.
Okay, 20,000. Fine. This is the journal entry that you will post in the first year. Done. And in year 2, anyone else? In year 2, what is the journal entry? Anyone else? Aditi?
Ma'am, loss on assets account debit. Sorry, PNL account debit.
Okay. P&L account is debited. You say, okay, I will write it what you're saying. Next.
Okay. And to asset account.
Okay. How much amount?
Ma'am, I think
Just
I'm
give a
giving
try. It is
incorrect.
fine.
Yeah,
If it is wrong,
I
also
think
it
I'm
is.
giving incorrect entry.
If it is wrong, also it is fine. Nobody is going to, kill you. It is fine because everybody is just learning, so it is fine. What do you say? It is P&L account debit to asset account.
To revaluation surplus.
True revaluation surplus. Okay. No, I'll say no.
Yeah, that's
Okay. Anyone else? Yes, Dhanlakshmi.
Ma'am, we have to take a
No, I can't
profit.
hear you. Your voice is so low.
Am I audible now, ma'am?
Little bit louder, please.
Now, ma'am?
Yeah, better.
Profit and loss account debit. We're going to
Hmm.
take profit and loss account debit of a debit, and then revaluation account also we're going to debit it, and then we're going to credit the asset. Credit the asset of
How much is the value that you should debit or credit? P&L account will be debited with how much?
P&L account. We're going to debit with 10,000,
Okay,
and then revaluation account we're going to debit with 20,000,
right.
and then
And
asset
asset?
we're going to credit with 30,000.
30,000. That's it. Asset value has to come down by 30,000. But how is it coming down? It is coming from P&L account 10,000 and revaluation 20,000. Why P&L 10,000? It is because previously we had a gain of only 20,000. So we could adjust only. Now I'll show you this also. If suppose this is a revaluation surplus account. In year one, how much did you credit? We have already credited 20,000. Yes or no? In
yes, ma'am.
year one, you have credited 20,000. Now in year two, can I write here 30,000? I can't adjust 30,000. When I have 20, I can only take 20 from there. That is why this will be 20 only, so that the account becomes zero, or the account, whatever surplus you have, you could adjust it. That is why this will not be more than 20,000. If it is less, also it is fine, but then you can't take more than 20,000, or you can't adjust more than 20,000. Is that clear?
Yes, ma'am.
I hope I'm clear with this example how increase or decrease of revaluation works. Now I'll show you the PPT. Can you see the slide? Now look at this slide. The same thing, whatever I told you is given here. Just quickly look at the slide once. The increase, decrease part. Look at this.
Ma'am,
Yeah.
I wanted to take the screenshot of that
Of
whiteboard.
okay. You want to take in full the second example. This is the second example.
Ma'am, also for the first one.
First one. Yeah.
Done, ma'am.
Yeah. Now look at this example. I mean, sorry, the chart, whatever we have. Mino, you can unmute yourself. Unmute yourself.
Yes, ma'am.
I didn't get your question. What is your question?
You did just one entry last time.
Then the
This
second
entry.
example.
Yes, ma'am.
Okay. Hmm.
Ma'am, here P&L account debit 10,000, revaluation surplus 20,000, and assets 30,000. Ma'am,
Yeah.
how it's on 20,000? 20,000 it's loss. So when we
No, no.
cancel
See,
it,
wait. Did you look at this part? This one. Can you see this part?
yes, ma'am.
What is our total loss? 30,000. That is what I have reduced from my asset. But I am adjusting 20,000 from my revaluation surplus and 10,000 from my P&L. That is what I've written here. No, nothing new. But the same thing I have written a journal entry. That's it.
Okay.
Got it?
Yes, ma'am. Thank you.
Okay. So if you're looking at this chart, what is given in this chart? If you have an increase in the revaluation, what you will have to do? You will have to head it as revaluation surplus, show it under owner's interest or the capital, owner's capital, right? That is what we are crediting to revaluation surplus. When you have an increase, that is agreed. When you have a decrease, what are you doing? You're transferring it to P&L statement. This is also fine. That is what we have saw in the example. But what is the exceptional case? The exception to this rule, both of them have an exception. What is the exception? When it is subsequently increased, initially decreased, which means what? Now it is an increase. In year 2, it is an increase. But initially in year 1, if it is a decrease, okay, in that case, what are you doing? You are recognizing into the P&L statement to the extent the reverse. So you just have to reverse the revaluation in the same asset previously recognized to the P&L statement. If you just read this, do you think you can understand? After reading this, did you understand what they're trying to tell you? Seriously. I mean, you'll feel like they told something, something, but you can't get it. What exactly they're trying to say, right? That is what we have done right now. The example, whatever we have done, is what this says. This complete chart says about that example only. I have put it in example first, then I'm showing you this chart because it is not even easy to understand this chart without that example at all. That's why given that example to you. I hope now you are clear with that exceptional rule, right? Exceptional rule for both the cases is what? Previously, was it an increase or decrease? That is what they're trying to tell you. See, previously, was it an increase or decrease, and then do the adjustment. That is the exceptional rule. That's it. Otherwise, it is simple. But the words are a little catchy. You'll only understand with an example. That's why I have given this example. Hope this is very clear. Now we understood what is revaluation, when to do the revaluation, the frequency of revaluations also we have seen, right? The frequency of revaluations we have seen. And then when you have an increase or decrease, what is the accounting treatment? I also gave you the journal entries also. In case of increase and decrease, what will be the journal entries? So that part is done. I hope this revaluation part is completely clear. Any questions in this? And I also told you revaluation should be done for the entire class of PP. You can't do it for one class of PP. Entire class of PP, you will have to do the revaluation. Did you do this? I asked you to do this case study with the techniques that we have done. I gave you one example in the previous class and I wanted you to do this. Did you all do it? This question to be finished, I think. Yeah. Read this question.
Entity A is a large manufacturing group. It owns a number of industrial buildings such as factories and warehouses and office buildings in several capital cities. The industrial buildings are located in industrial zone, whereas the office buildings are in central business district of the city. Entity A's management want to apply the revaluation model as per accounting standard 10 revised to the subsequent measurement of the office building, but continue to apply the historical cost model to the industrial building. State whether this is acceptable under accounting standard 10 revised or not with reason.
Okay. So this question, they had two different kinds of buildings. One are industrial buildings and the other one is the office buildings. They're able to segregate that. It is because I think they're industrial, they clearly told, the buildings located in the industrial zones are, completely for industrial purpose, which is in a different, places also. And office buildings are in the central business districts of the city. So they have a segregation that these are industrial buildings and these are office buildings. Two segregations are completely there for them. Now they're asking, can I follow a different method for this industrial buildings, and for office buildings can we follow a different method? It is what they're trying to say, because for one of them they wanted to follow cost model, and for the other one they wanted to follow revaluation model. Can they do that? The question, I hope you're clear with the question. One building, industrial building, I think industrial building, they wanted to follow cost model. And then the office buildings, they wanted to follow revaluation model. Can they do these kind of two different treatments for two different buildings? That is the question. I hope you understood the question. So what do you say? Can they do that? Can they follow two different methods? Some are saying yes, some are saying no. Most of you are saying no. Why no? Okay, I wanted to unmute one new face today. Surinder Kumar. Surinder, unmute yourself.
गुड मॉर्निंग मैम।
Morning, yes.
मैम
So you said
दोनों
no. Why
ये
no?
यस मैम दोनों में एक ही मॉडल चलेगा ना जी उसी में।
क्यों?
उसकी रीवैल्यूएशन कॉस्ट जब बनाएंगे मैम इसको तो उनको दोनों में एक ही मॉडल लेंगे ना, तभी वो एक ही आंसर आएगा उनका। अलग अलग लेंगे फिर नहीं बनेगा वो।
Which means, like I told you, entire class should have entire class of PP have to be revalued at once. That is what it says, correct?
Yes,
I
ma'am.
told you before also, when doing a revaluation, you want to change it to revaluation model, you will have to do it for that entire PP. I agree to this. But now in this case, you are able to segregate. It is not needed that when you say building, all the buildings will come into that class only. It can be possible that in buildings also you will have two different classes. The same thing happened in this question. In this question, what happened? They are having two different characteristics here. The industrial buildings are having a different characteristic here, and office buildings are having a different characteristics here. So the management is categorizing them into two different classes. One is like industrial buildings, and the other one is the office buildings. So two different classes are there. Now, they only want to revalue this office buildings. Can they do that? Yes, they can do it. But suppose in office building, if they have some 15 buildings, all the 15 buildings have to be revalued. That is what it means when they say entire class of PPE have to be revalued. So in building, office building, if they have 15 buildings, and they want to do only one building ka revaluation, that is not possible. All 15 buildings ka revaluation have to be done, right? But if office building is categorized and the characteristics of that building is a separate class, then it is fine. Only office buildings you can revalue. Is that fine?
Yes,
Industrial buildings, they're segregating it as a separate thing, is a different industrial zone. So you can retain it at cost model only. That is fine. Because the company wants to retain it at historical cost model, they can retain it.
Yes, ma'am.
Okay. This is about the class, if you're doing a revaluation, you have to do it for the entire class. That is what this means. Now, I think we have to talk about this question was done. Evaluation gain or loss. Okay. I'm going to talk about depreciation. The main part of the PPE is one is revaluation and the other one is the depreciation part. Okay. Some are raising their hands. Aditi, you have a question? And Harshal, do you have some question? You're raising your hand. Harshal, you have something to ask?
Ma'am, not a question, but I want to add it in this revaluation model, which you told in illustration 10. In that one, office buildings are in central business, right, ma'am? And the industrial business in the industrial zone. And therefore, business can do with their they can accept on their own as per the requirement of the place where
Yes.
the building is situated. Hence, it is not a it cannot do as with the
It has
historical
a
model,
different characteristic mainly. So
vice
that is
versa.
why. Yes,
It
yes,
can't apply the vice versa models to each other,
yes.
right, ma'am?
Yes.
Okay, ma'am.
What about Anil? You also have something to ask?
Ma'am, actually, hello, I'm audible, ma'am.
Yes, tell me, Anil.
We had a continuous losses, and like, how can we reverse in that case? Like,
If
will
you're
the
having
loss
loss
expire
every
after
year,
a certain year?
yeah, yeah. If you have loss, that loss will continuously go to P&L statement only. Now, whenever you have some gain, you will try to recover it. To the extent the gain
Ma'am,
is. Mm.
like like till how many years can we
Like the standard did not mention any number of years, ma'am. To the extent possible, if you can recover your losses from the gains you have in future, you can do it. If you don't have gains, you will anyway have to send it to P&L statement only, now. If you have gain, then
yeah,
you can.
ma'am.
That's it.
So there is no expiry of the loss, right?
No, none.
In
No
order to
such
reverse.
information is there in the standard, which means you can do it.
Okay, ma'am. Thank you.
Ma'am,
Yeah.
ma'am, in illustration 10, ma'am, which model now we will follow, that cost model or evaluation model?
Where for which one?
Ma'am, illustration.
I mean, office building or
Yes, ma'am, that industrial building and office building.
industrial building? They clearly told that they wanted to apply cost only. Only for office building, they wanted to follow revaluation. They clearly told us for office, they wanted to follow revaluation model, and for industry, they still want to continue cost model. Can we do that? Is what they're asking. Yes, you can do that
Oh,
because you are splitting these industrial buildings and office buildings into two different classes. The entire class of office buildings can be revalued, and still retain the industrial building at cost model.
okay.
Yeah. There are three important factors you will have to know in depreciation, right? One is the cost of the asset. That's the main thing, right? Without this, you can't even start depreciating. This is one thing you will have to know. And the other is residual value and useful. Okay. So these three are main important factors for calculating any depreciation. Cost of the asset, we have already discussed what should be included in the cost of the asset, excluded in the cost of the asset. Everything is there in the standard. Now, when you're coming to residual value, anyone, what is a residual value? What is a residual value? Yes, Nisha?
Ma'am, that is scrap that we sold
Mhm.
wasted.
Scrap value, okay. Anything else that you want to explain other than this?
Ma'am, from the asset we decrease that residual value to calculate depreciation.
Okay, okay. Now, the residual value means what? After the useful life. Yes, after the useful life of the asset, if you have to sell this asset, then what will be the value you will sell it for, right? It is almost like a scrap value, but by the end of the useful life, if you're able to sell this value, what will be the value you will sell it for? That is the residual value, correct? And now, what is useful life? For how many years you will be using the asset, for how many years you will be, this is expected only. We can't say this is like the final useful life. This is the expected useful life. We are expecting that the building can be used for 15 years, or we are expecting that the machine can be used for 4 or 5 years. So that is an expectation we do. this will be the useful life of a particular asset. And the residual value is also an expected value only, because this value is after your useful life, which means after 10 years or after 20 years or after 15 years. So today this is just an expectation that this would be the value, but this will not be the final value. After actually the asset is sold, at the end of the useful life, whatever is the value you sell it for will be the final value as a disposable value. But for now, we will just do an expectation of the amount that in future this asset can be sold for 1 lakh in future after 10 years. So this 1 lakh is called residual value. Now what will we do with this residual value or the useful life? How will you calculate depreciation? For calculating depreciation, we have a formula. Depreciable amount divided by useful life. Now what does depreciable amount? Depreciable amount is equal to cost of the asset minus residual value. Right? Cost of the asset minus residual value will give you the depreciable amount. If that depreciable amount is divided by the useful life, then you will know what is the depreciation that have to be charged every year. Now, where will you charge this depreciation? Do you take your depreciation to your balance sheet, or where do you show this depreciation? How is the depreciation treated? What is the treatment of depreciation? There are two treatments that have to be done. There are two treatments that have to be done to your depreciation. What are those? One, it should be taken to P&L as an expense. Yes. And what is the other one? In the asset account, it has to be deducted. Correct? So these are the true treatments. Yes, you all are right. Very good. Correct. You all are right. Yes. Now, these two are the accounting treatments. Fine. Agreed. When will you start depreciation? This is again one important question you should know. When will you start depreciating? There are two options available to you. When will you start? So which one will you pick? Should I start depreciating when the asset is available for use, or when it is actually when you actually started using it? Which one will you pick? Waiting for the answers in the chat box. There's only one person who gave a right answer. Rest all are wrong. Okay, I want Lohit to unmute himself. Lohit, are you there?
Yes, ma'am.
Yes, Lohit. Why did you say available for use?
Like if I take an example of a car,
Hmm.
me being a company, if I purchase a car and I
Hmm.
don't use it, it will still depreciate and value day by day.
Hmm.
Than if I use it also, whether I use it or not, doesn't
Hmm.
come into picture because
Hmm.
the asset is already in my name.
Hmm.
Me using it or not doesn't make any sense of for it to depreciate. So I
Hmm.
told available for use.
Right, very good, Lohit. He's right actually. Okay, most of you told actually started using it, but the standard says you should start depreciating when the asset is available for use. Right. The reason behind this is it is because, like he told, if your asset is ready, okay. Now let us suppose you have a building. You finished construction of this building. Now after finishing the construction, and you told that I'm waiting for an auspicious day, and then I wanted to start using this building, okay. But then that reason will not stop your building from being depreciated. No, your building is ready for use, it will start depreciating, the value will come down. Right, your asset is ready, it means it is available for use. It means you will have to start depreciating from that day itself when it is available for use. You can't say that I will, wait for some more days. I'm waiting for some other reasons. All these will not work. When it is available for use, you will have to start depreciating your asset. So this is one main thing, you will have to remember, because in most of the questions, what happen is depreciation is mostly given to you as a part of some question. They won't give you depreciation as a separate question mostly. So they will give you a part of a question. Now they will give you two different dates. They will tell you that today it was ready, and then we have started using it, or we put to use it on a different date. So then which date will you pick? That date will change your answer completely. So this word available for use is very important in depreciation. When it is available for use, you will have to start doing the depreciation part. This is one important thing. And I told you the accounting treatment also, P&L and asset account. Next, one more thing you should know about depreciation is component depreciation. Component depreciation means what? Now, if you remember, I gave you an example of aircraft. Okay. Now, and I also told you that major replacements and major overhaul things also happen to this aircraft and all. If you remember, when we were discussing that, I told you. Now, aircraft also has such kind of a parts. Okay. Suppose there is the machine of this aircraft. The cost of aircraft is 10 lakhs. The machine will cost you 2 lakhs. Okay. The machine, if you have to replace that machine or you have to change that machine, it will cost you 2 lakhs. Is this a major component of that asset? Asset is aircraft, which is 10 lakhs. But 2 lakhs is something which is very major also, major component in that particular asset, right? Now, if suppose the useful life of this aircraft is different, and the machine car, or the engine car useful life is different, then the standard says you can start providing depreciation separately for these two. So what will you do? You will write aircraft 8 lakhs. This will be depreciated in maybe 10 years. Okay. Then you will write the engine, which is costing 2 lakhs, and this will be depreciated within 5 years only, because this has to be replaced every 5 years. The useful life of this is 5 years. Total cost of aircraft is 10 lakhs, but you're splitting this 10 lakhs into two different components. One is the entire aircraft, and the other one is the engine that is existing in the aircraft. Because it is a major component of that asset, you are trying to split it. This can mostly happen if the useful life of that particular components are different. The value can be easily identified, and if the useful life is different, then you can do this kind of component depreciation. This is called component method of depreciation. Can you divide your asset into different major components and start providing depreciation for different components? The standard says yes, you can do it. If, like I told you, if the useful lives are different and the cost can be easily identified for those components, you can do it. Otherwise, you can't do it. Right? This is also one more important thing you will have to know for depreciation. And in the other thing in depreciation is about the change. Okay, before this change, let us see. What are the different methods of depreciation? Anyone? What are the different methods of depreciation? You all know, very, simple methods you have been learning from so many days. Okay, right. Yes, most of you gave the right answer. Straight line as one, WDV, or we also call it a diminishing balance method. This is one. You also have one more, which is units of production. This generally will not apply for all of them. This applies to only few kinds of organizations where the production completely depends upon units. I mean, I have a machine. Okay. I have a machine. I can't say that I can use this machine for 5 years. That cannot be determined. Okay. If you have to use straight line method or WDV, you at least have to know some number of years or the percentage, right? But in few cases, a particular machine or a particular kind of an equipment, we cannot say that I can use it for 5 years. Why? Because the usage depends upon the production. This machine has a capacity of providing some 10 lakh units. 10 lakh units only it can produce. If you are using this 10 lakhs in 2 years, then the machine will expire in 2 years. If you are able to use it in 5 years, then it will expire in 5 years. So how many number of units of production you do, that many years the machine will work. That's it. You can't say that the machine will work for this many number of years. In such kind of manufacturing units, you will try to prefer this method, units of production. Otherwise, mostly you will try to prefer the number of years, because for any asset we can say that this can be randomly used for this many years. But for few kind of an assets, you can't say the number of years. You can only say that it will produce this many units. In such kind of organizations or such kind of equipments or machinery, you will use units of production. I think this part is clear, units of production. Okay. Now, what is a straight line method? Straight line method, we can say that the depreciation here is an equal amount. Every year it is equal. So the value that depreciates according to this method is equal. The depreciation here gives you an equitable amount, or we can say that it will give you a kind of a depreciation which is equal for all the years, right? It is equally distributed. But here it is a depletion method wherein the value depletes every year. The value of depreciation is not same every year. It is in a depleting trend every year, but here the depreciation is equal every year. That's the only difference, right? So when you say straight line method, how do you calculate depreciation? If 1 lakh is the value of cost of the asset and you can use it for 10 years, so what is the depreciation? 10,000 per year. Are you all there? Are you all there? Yes. Okay. Suddenly I feel everybody is missing. Now, when I say diminishing value method, then how do you calculate depreciation? For the first year, it will be same, almost 10,000 per year. Depreciation for any method, it will be the same in these two methods. Now, the second year, what will be the depreciation? 1 lakh minus 10,000, which will be 90,000. This is WDV. Now, depreciation will be equal to 90,000 divided by how many number of years are left? 9 more years. Yes, 9 more years. 10K. So you start depreciating every year on the WDV value, whatever we have, right? So that's the difference between the straight line method and the diminishing value method. And units of production method, like I told you, it depends on how many number of units that you are producing during the lifetime of that machinery. If it is giving you 1 lakh units or 10 lakh units or 20 lakh units, the depreciation also will depend upon that, correct? Okay. So methods of depreciation is one thing you have to know. And when will you start depreciating? I already told you when it is available for use. And this is the component depreciation that I was talking about. This is the accounting treatment. And how do you calculate depreciation? Generally using the residual value and all that. It's 3 factors I have told you. Okay. Now, change in the method of depreciation. Can you change your method of depreciation? Can you change from SLM to WDV or WDV to SLM? Can you do that? Yes, we can do that. The standard says you can do it. Okay, if you want to change from WDV to SLM or SLM to WDV, you can do it. But with the condition that it is appropriate. Because why are we doing this depreciation? First of all, why are we doing this depreciation? Why are we doing this depreciation? Why do we have to do this depreciation? Why can't, we simply show the value of the asset without even showing depreciation? Why do we have to show this depreciation? There is a word, or there are few factors. Can anyone tell me that factors? Waiting for the answers. I didn't get the proper answer. Tax implications. Fair presentation. Okay. For investors to know. Okay. Hmm. Have you heard these words? Wear and tear, obsolescence. Have you heard these words before? Yes, assets will become obsolete. Wear and tear, usage. Have you heard these words? Yes or no? From our childhood, we are learning these words, no? Right? What are these words now? Now, the asset, when it is being used, for a certain period of time, the use, because of the usage, the value of the asset will come down in future. So to show that we are using depreciation as a base, so based on the usage only, you will start depreciation also every year. That is why it is called, it has to be structurally depreciated every year. You can't say that I will use it for 10 years, but I will show depreciation for 5 years. This cannot be done. If you're using it for 10 years, structurally you provide depreciation for 10 years. That is what the standard says, right? Because if you're using for that means, because the asset might be used for 10 years, the value will come down. After 10 years, the same value will not exist. That is why you start depreciating, correct? So the reason behind depreciation, we have so many other factors also to why are we depreciating and all that. Now, can I change from one method to other method? Yes, the standard says you can change, and this is considered as change in accounting estimate. This is called what? Change in accounting estimate, which means the effect have to be prospective effect. Okay, you have standard AS5, which will talk about change in accounting estimate, change in accounting policy, prior period items, and all that. It will be more clear there about all those things, but here I will only talk about the depreciation part. Okay. So when you're changing the method from one method to other method, it is considered as change in accounting estimate, right? Prospective effect means what? You don't have to go back to the previous years and change the entire depreciation. You can change it from today. Like, suppose you are in year 5. Okay, this year 5, you wanted to change your depreciation method from SLM to WDV. Can you do it? The standard says you can do it if it is reasonable. If it is reasonable that you feel that, more than SLM, WDV method or the diminishing value method is giving you better value, you can change it. And prospective effect, which means what? From year 5 only, you start changing the depreciation. What about the previous year? You can leave it like that. That is why it is called prospective effect. Prospective effect means what? From today, when you're deciding today to change the method, from today you start changing the depreciation amounts. You don't have to go back and change all the previous years ka depreciation, right? That is what it means, prospective effect. So any change in depreciation can be done if there is a reasonable evidence that it is needed for you to change the method. This is considered as change in accounting estimate, and it should be given a prospective effect. No need of giving a retrospective effect. Retrospective effect means what? You have to go back to all the previous years and change all those. That is not needed, right? So this is one thing. Every year, mostly you can check for, if you want to review, you want to change the method of depreciation, you can check it every year. The review can be done every year, right? So this is one more thing that you should know about depreciation. Look at this question. Illustration 11. Entity A has a policy of not providing depreciation on PPE capitalized in that year until the following year, but provides a full year's depreciation in the disposal of an asset. Is it acceptable? Now, what we are saying is, in year one, suppose today, the year is from 1st April 2024 to 31st March 2025. Okay, this is the year. Now, they have purchased the year on, let us suppose, 30th September 2024. This is in between, in the middle of the year, right? So the company, what they want to do is they wanted to follow such a policy that in this year of 2024, they don't want to provide depreciation. Okay, because they have to do it for months. No, when it is not acquired in full, you have to provide depreciation in months proportionately. They don't want to do it. So what they want to do is they wanted to provide the depreciation in next year. Next year, matlab 1/4/2025 to 31st March 2026. You have this year, no? In this year, they wanted to start providing depreciation. Do you think this is right? Can we do this? Can we do this? Is it acceptable? We have discussed a word. Just now we have discussed a word that if it is available for use, you will have to start providing depreciation. And I also told you it has to have that structural way of providing depreciation, wherein when you started, using it on 30th September, you have to start providing, depreciation from 30th September itself, right? If it is in months, maybe for 5 months, 6 months, you provide depreciation proportionately. But you can't say that I will ignore for this year and start depreciating next year. This cannot be done, right? Are you clear with this? Yes or no? This is simple only. And I also told you about the change in estimated life and all, right? Let us see this also on one question on this. Yeah, read this question. Illustration 12.
Entity A purchased an asset on 1st January 2000x1 for 1 lakh and the asset had an estimated useful life of 10 years and a residual value of nil. On 1st January 2000 X5, the directors review the estimated life and decide that the asset will probably be useful for a further 4 years. Calculate the amount of depreciation for each year if company changes straight depreciation on straight line basis.
Okay, someone was asking if how do we do the change. So this question will tell you how do we do the change, right? Now, what
Ma'am,
is
I
the
have a doubt. We can change to units of production method also, ma'am.
Units of production method cannot be changed for all the cases. I told you, it is very specific. See, this is an asset. We don't know what kind of an asset this is. For this asset, if units of production method can be applied, you can change it. Okay, but all the assets you cannot apply, no, units of production method, because for that you need to know how many units it will produce in that year. Or suppose building is there, do you know how many units it will produce, that building? Building will not give you units, no, in production. So all assets it cannot apply. If there is an asset which we can apply units of production, you can. Otherwise, no. Right?
But I have a ma'am, please explain with example that units of production method how it goes. Like straight line diminishing that we know, but how we
Yeah, you
when
must
we
have had
do.
it in your foundation. In your foundation, there are a lot of other methods also.
Ma'am, I am
Are
direct
you
entry
directly?
exam.
Okay, okay.
Yes, ma'am.
Okay, let me finish this, then maybe we'll take up that example.
Okay.
Yeah. So when did we purchase this asset? On 1st January. The cost of the asset is 1 lakh, right? Now the estimated useful life is 10 years and the residual value is nil. They clearly told that. Now, what is the depreciation here? 1 lakh divided by 10. Am I right?
Yes, ma'am.
Because there is no residual value, the depreciation is how much? 10,000, right?
10,000.
Now, this is all okay. Today we have purchased, and then we are estimated that the depreciation is 10K. It's all done. But what happened suddenly in 2005, which means almost after 4 years, the directors, they wanted to review the life of the asset, and they have estimated that the useful life remaining is only 4 more years. How many years are already done? 4 years are already done. Actually, they told 10 years. 4 years are already done, which means there are still 6 years. But the directors are assuming that it cannot be used for 6 more years. It can be used only for 4 more years. That is what they're trying to tell you. Now, can you change your depreciation? Yes, because it is the estimated useful life. When useful life is changing, this is not the method change, right? It is mostly the useful life that is changing here. So how will you change this? Now the depreciation for 4 years is how much? 10,000 into 4, which is 40,000, correct? Cost is 1 lakh. Depreciation for 4 years is how much? 40,000. So what is the carrying value or WDV that you have? 60,000. Now today you are assuming that your useful life is not 6 more years, it is only 4 more years. Correct? Then what will be your depreciation? 60,000 divided by 4, which is 15,000 per year. This is clear? Very simple. It's very simple. From year 5, what will be your depreciation? 15K. That's it. Right? So from today only you changed. From year 5, you changed the depreciation. Did you change year 1, year 2, year 3, year 4 depreciations? Year 1 to 4, you did not change the depreciation. Only from year 5, you have changed the depreciation. That is what it means when you say a prospective effect. Clear? I hope this is clear. When you're changing, how will it affect? Like she was asking that units of production. I'll quickly tell you one example of this units of production method also. Most of you must have known. If you are from foundation, you will know this. But for others also to know, I'll just quickly give one example. Okay, the machine, we have purchased a machine, and the cost of the machine is 10 lakhs. Now, this 10 lakhs is the value of the machine. And I told that I don't know what is the useful life of the machine. The machine doesn't have any number of years. It only has units. Okay. So the machine has a capacity of 1 lakh units is what I told. So how will you provide depreciation now? Depreciation in year 1 will be how much? I will have to see. I know that total number of units that machine will produce will be 1 lakh, right? So I will check in year 1, how many units did that machine produce? Let us assume that the machine has produced some 20,000 units in year 1. Okay. In year 2, some 15,000 units. And in year 3, 12,000 units. This is just an assumption and it will go on. Okay. It will go on. We don't want all those. I will just do it for 1 or 2 years. So now in depreciation for year 1 will be how much? 10 lakhs is the value of the depreciation, correct? And in year 1, how many units did you do? 20,000 units you have produced, divided by what are the total number of units? 1 lakh units. This is how you will calculate depreciation. Calculate this depreciation amount. 20,000 is the number of units you produced in year 1. 1 lakh are the total number of units you will produce in the entire life of that machine. It is how much? 2 lakhs. Okay. So depreciation is 2 lakhs. Now in year 2, what will happen? 10 lakhs is the value of the machine. And how many units did you produce? 15,000. Divided by total number of units, 1 lakh. So this will give us how much? 15 lakhs. Okay. 15 lakhs or 1.5 lakh? Just check. 3 lakhs. Huh? I got so many different answers. Please check again. 1,50,000, 1.5 lakh. Yes, yes. Now in the third year, what will happen? 10 lakhs into 12,000 by 1 lakh. How much is this? 1,20,000. Okay, got it. And now you understood? So the depreciation will depend upon how many units you are producing in that year. Total units we know, but how many units you are producing in that year will give you the depreciation for that year. Nisha, are you clear now? And others also who are having that doubt of units of production method, I hope you are clear now. We'll do one more question and then we'll break. Just a small question only. Okay, look at this illustration 13. In illustration 13, entity B constructs a machine for its own use. Okay, the construction is completed on 1st November. Construction is completed on 1st November, but the company does not begin using the machine until 1st March 2002. So when will you start providing depreciation? Is it on 1st November or 1st March? Quickly answer this. Simple. Is it 1st November or 1st March? Everyone agrees that it is 1st November. Okay, most of you told 1st November. That is what it means when I told you available for use. I told you available for use covered, right? So the building was ready or the machine was ready on 1st November. So you will have to start providing depreciation. They did not start using that machine. It is the problem of the entity. It might be for any other reason that they did not start. But since it is ready for use or available for use, you will have to start depreciating. So the answer is 1st November only. On 1st November, you will have to start providing depreciation. Okay, done. Okay, I'll just pause. We'll break for 5 to 10 minutes, and then there are a few other questions in the depreciation, and then we'll do one question which has all the revaluation, depreciation, and everything. Then we'll close this chapter. Okay. Be back in just 5 to 10 minutes. Technical team, we'll take a break. Okay. Yeah. Now look at this question. The property is costing 10 lakhs. It is bought in 2011, right? Its estimated total physical life is 50 years. So the physical life that is expected is 50 years. However, the company considers it likely that it will sell the property after 20 years, which means though the useful life is 50 years, but the company doesn't want to use it for 50 years. They only want to use it for 20 years. So you will depreciate the asset also in 20 years only. We don't want 50 years. The building might be useful, the property might be useful, but still your usage or you want to use it only for 20 years. So depreciation will also be provided for 20 years. That is fine. Now, the estimated residual value in 20 years time is based 20 years time based on the 2011 prices is they're giving you two cases here. Now, what if your residual value is almost equal or more, right? That is first case. Or if the residual value is less. And this is the second case. Then what will you do is the question here. What will be the amount of depreciation? Let us do this. Now, in the first case, what is the residual value? 10 lakhs. What is the cost of the asset? 10 lakhs. Generally, if you have to provide depreciation, what you'll have to do? Cost minus the residual value divided by the useful life. Here, the useful life is 20 years. So how much is the depreciation in this case? How much is the depreciation in this case? 0, or we can say nil. Correct? Agreed, everyone? Yes. So the standard says, okay, let us finish the second case also, then we will do that. The second case, what is the residual value? 9 lakhs. So cost is 10 lakhs and residual value is 9 lakhs. So what is the depreciation? Depreciation will be how much? 10 lakhs minus 9 lakhs divided by 20 years. Agreed? Calculate the depreciation. What will be the depreciation for a year? 5,000. Okay, 5,000 per year. Okay, so what is proved by these two cases? If your residual value is equal or more than your carrying amount, is equal or more than your carrying amount or cost, then there is no debt. Is this proved from the example that we have done? That if the residual value is equal or more also, then there is no depreciation. Only if the residual value is less than your cost or carrying amount, only then you will have depreciation. Is this proved? Can you see this? If suppose the residual value here is 12 lakhs, even then your depreciation will be nil only. Correct? Even then the depreciation is nil. Are you understanding this example? Right? So that is what the standard wants to prove here. The standard says there will not be any depreciation if your residual value is more. Right? So you'll only have depreciation if the residual value is less. That is what they wanted to prove here. Okay. We'll take one more question. We saw the different methods of depreciation, right? And I also told you about the review and how review is based on. Okay, now look at this question, illustration 15. Illustration 15. Entity B manufactures industrial chemicals and uses blending machines in the production process. The output of the blending machines is consistent from year to year and they can be used for different products. So they told that the output is consistent from year to year. Okay. However, maintenance cost increase from year to year and a new generation of machines, maintenance cost is increasing year to year. And the new generation of machines with significant improvements over existing machines is available. every 5 years, right? Suggest the depreciation method to the management. Now the question is what? You have industrial chemicals and the blending machines that are there. The output of that blending machine is consistent, correct? The output of the blending machines are consistent from year to year, correct? And they're used in different products also. Now they're asking you, how will you depreciate? Which method will you use? When it is consistent from year to year, mostly we will try to prefer SLM, which is straight line method. I told you also, in straight line method, the depreciation for every year is constant. And if it is WDV, the depreciation every year reduces. Here, if the usage of any particular machine depletes year by year, then we can prefer WDV. But since they told, the blending machine has that consistency from year to year, we will prefer to use SLM method, which is the straight line method, right? Okay, now this is also one thing we will have to discuss. Change in liability. Okay, what is this change in liability, or what is this thing that we are going to discuss? Is sometimes we had decommissioning cost, right? We had decommissioning cost, restoration cost, and when we are calculating the cost of an asset, we had so many inclusions and exclusions also. A lot of inclusions were there, exclusions were there. Now sorry, suppose in any inclusions or exclusions, or in this decommissioning or restoration, in anything, if you have any change, which means earlier we estimated that the value was 1 lakh. Now you are re-estimating that it will be 1.5 lakh, or it will be 50,000. It can be increase or decrease, both the ways. So if you are estimating that the value is changing, the liability is changing in future, then how will you record for it, or how will you account for it? This will change according to the model. Okay. If it is following cost model means what? You are recording the asset at cost, right? No change in that. The asset is recorded at cost. In case you are following cost model, then plus or minus to the cost of the asset have to be done. Because we only have cost in our hands, plus or minus to the cost of the asset have to be done. This is when we are following cost model. But if you are following revaluation model, then what will happen? Here again, you can have increase, can have decrease. Correct? Your value either can increase or decrease. Increase, we know revaluation surplus. Decrease, we know P&L. And what is the exception to this rule? You remember the exception? Previously, if you have an increase or decrease, accordingly, you will adjust that. Same thing we will follow here also. If it is an increase, you will take it to yeah. So if accordingly increase or decrease, you will try to adjust it from your owner's capital, the revaluation surplus and all those things, right? If cost model, since you don't have the revaluation surplus and all those things, directly it is adjusted from cost. But if it is revaluation model, since you have revaluation surplus account, it should be adjusted from there. If not, P&L statement. That's it. This is very simple, like we have done that before. Now look at this question, illustration 16. Entity A carried a plant and machinery in its books at 2 lakhs. These were destroyed in a fire. The assets were insured, new for old, and were replaced by the insurance company with new machines costing 20 lakhs, right? What is the book value in your books of accounts? In your books, you have a carrying value of 2 lakhs. Now, because they are destroyed in fire, the company has given you the insurance company has given you a new machine, new for old. Exchange May it was given. The machines were acquired by the insurance company, and the company did not receive 20 lakhs as cash, right? Cash compensation. State how entity A should account for the same. Now, any loss, we know that any loss or whatever it is will go to P&L statement, right? So this is like common. Any loss will go to P&L statement. If you are assuming that something is going to come up from insurance company is giving you something, this will be a receipt for you, which should be shown as a receipt. If it is received, you will show as received. If it will be received, then you will do it as an asset that it will come up in future. In future, if you are going to receive, the company has assured, insurance company has assured that you are going to receive it. You will show that it will be a receivable to you. If you have received it, you will show it as a receipt. And then if the asset which is not there now, that has to be derecognized. What is derecognized? Derecognized means asset whatever was purchased earlier will be removed from your books of accounts. Why it will be removed? Because this asset is no more there, so you will have to remove it from your books of accounts. Here, this asset will no more be there, so this has to be derecognized. Why? Because this is destroyed in fire. This value has to be derecognized, and the new machine of 20 lakhs will be recognized in your books of accounts because you got a new machine instead of the old one. It is replaced with the old with new one. Thus 20 lakhs new machine will be recorded in your books of accounts, and the old one will be derecognized. Right? Okay, so the derecognition part is one thing. So what is derecognition? This can happen in two cases. Okay, one, the asset is not having any future economic benefits or disposed of or sold, we can say, right? If the asset is sold, or if the asset it is disposed, means it is sold, right? Or if the asset is not giving you any kind of future economic benefits, then you will have to derecognize it from your books of accounts. Now, what is the journal entry if you have purchased an asset? Asset account will be debited to cash or bank account. Everybody knows the journal entry. Agreed, everyone? Asset account is debited and cash or bank is credited when you have purchased it. So when you are derecognizing it, what will happen? You will receive some amount because you sold it. You will receive some cash or bank into your books of accounts, so that will be debited, and the asset have to be removed from your books of accounts, so that will be credited. This is called derecognition. Derecognition means removing it from your books of accounts because it is no more there with me. I will have to remove it from my books of accounts. So if you have a difference in the value, that will go to P&L statement. That amount will go to P&L statement. Let us take a small example. Now, an asset was purchased for 1 lakh cost. Now the depreciation I have provided till date was some 60,000. Okay. So what is the carrying amount I have? Carrying amount that I have is 40,000. Now I sold this asset. For some 50,000. Now, is this a gain or loss to me? Is it a gain or loss to me? Gain of how much? 10,000. Everybody agrees to it. So this is called gain on disposal. How did you compare? We are comparing only carrying amount with the sale value. You cannot compare 1 lakh cost and the sale value. You will compare what? Only the carrying amount and the sale value and see whether it is a gain or loss. Carrying amount only should be compared. Now, one more example. Suppose my carrying amount is 40,000 only, but I sold it for, let us suppose 20,000. I have a loss of 20,000. Agreed? Okay. Anyway, if it is a gain or loss, anything should go to your P&L account. Gain or loss on disposal will go to your P&L account. But one thing you have to remember is it has to be compared with your carrying amount and not your cost. It should be compared with your carrying amount. Carrying amount is what? Nothing but after your depreciation, whatever you have will be your carrying amount, right? So we talked in this part, we talked about the derecognition. We'll do a problem, don't worry. So this is about the derecognition part. And then we also discussed about the depreciation, revaluation, and everything. So the standard mostly is covered except the disclosures. Yeah. So the last part of the standard is disclosures. Now, in this disclosures, you have four different categories of disclosure. One is the general disclosure, the other one is the additional, then you have disclosures related to revalued asset and voluntary disclosures. I told you before also, every standard will give you a set of disclosures to be written down in the notes to accounts, right? In general disclosures, what we have to discuss is what is your measurement basis. What is your measurement basis means what? Did you do it as per cost model or revaluation model? That's one thing. And how did you determine the gross carrying amount? And what are your depreciation methods? Because we have SLM, WDV, units of production. Which method did you use? What is your useful life? How did you determine your useful life? Do you have any kind of a base to say that this is the useful life? All that also will be mentioned. Then gross carrying amount and the accumulated depreciation. Do you have any kind of accumulated depreciation, and how did you calculate the carrying amount? Also impairment loss, but don't ask me what is impairment loss right now, because we will discuss that when we are doing the impairment standard, right? So this at the end of the year and the beginning of the year also have to be disclosed. And also you will show a reconciliation. This reconciliation is more important. In this reconciliation, what will you do is you will show what are the additions, which means any new assets purchased or any disposals you have made in the year. What is the opening balance of the PPE? And then you, what is the depreciation you have provided? What is the impairment loss that you have provided? Finally, what is the carrying amount you have? All these have to be provided in your reconciliation. What is your opening balance? What is your closing balance? At the beginning and at the end of the years, what are your balances? And how did you arrive at those balances? Did you have any other additions, or you have any assets that are retired, any acquisitions that you have done, increase or decrease because of revaluations or impairment losses that you have done, depreciations, or any translation differences? Everything have to be adjusted. Any changes, finally show your closing balance. So this reconciliation is one main important thing to be disclosed in your notes to accounts, right? Now, other than this, you also have additional disclosures. In additional disclosures, you will mostly talk about the title, right? Do you have any restrictions in the title, or do you have any pledges? Suppose this PPE, you might have a building which you must have pledged with the bank, or you have given it as a security to the bank for any liability. So do you have any such kind of restrictions, or any amount of expenditure that you have recognized, or any contractual commitments are there for that acquisition? Anything relating to that property, we can say these are like mostly which talks about the title of the property, or do you have actual right on that property or not? All those things have to be disclosed. And if there are any assets which are retired matlab you're no longer using that asset, there is no asset future economic benefits, all such assets also have to be mentioned in the additional disclosures, right? And then this is very specific to the revalued asset. We have done the revaluation. So when few assets are revalued, you'll have to see what is the effective date of revaluation. Who did the revaluation? Someone told you that I have to increase the value of the asset to 120. Who told you this 120 value? There might be a valuation person who must have done it, right? So who is that person who has done this? Independent valuer. And what are the assumptions he made to calculate this value? How did he estimate the fair value, right? And did he look at the active market or not? Did he take the arm's length price or not? How did we get the revaluation surplus, or do we have revaluation loss? And any other things that you have to disclose also have to be mentioned about the impairment or anything about useful life. Everything have to be mentioned relating to the revalued assets. Suppose you revalue a building, everything to that relating to that building. When did you revalue? How did you revalue? At what value did you revalue? How what are the assumptions you have used to get that revalued amount? Everything relating to the revalued assets have to be there. This is about the revalued assets disclosures. Then the last one is voluntary disclosures. This mostly you will try to mention about the temporary or idle properties, or any assets that are retired, or you will have to show if the gross carrying amount of the fully depreciated property. Suppose 10 years is our expected life. After 10 years, if you're still using the building, right, all such assets things also have to be mentioned. If that asset is still actively used without selling such kind of an assets, what are the carrying amount of such assets? And the revalued assets how did you recognize the cost? everything relating to, the temporary or inactive assets. This is your voluntary disclosure, right? If you want to mention about the assets that are not being used or are not actively used or temporarily idle and all, you can use this section of voluntary disclosures, right? So that is about the four kinds of disclosures that we have. One is general, additional disclosures relating to the revalued assets, and voluntary. We can say that these are generally about the reconciliations. Okay. These additional disclosures are about the title, and these are about the revaluation. These are your voluntary, which talks about, okay, inactive assets, we can say inactive, or assets which are idle, all such. So that's the breakup, we can say. But mostly what you have to cover is everything, and everything relating to that. You can't say that this is something, how we have calculated. Now, in your balance sheet, suppose this is the balance sheet, you say PPE, you have a building value is 10 lakhs. How did you get this 10 lakhs? This will be clearly shown in the reconciliation that we have, uh, in the notes to accounts, right? After all your financial statements are prepared, like, someone is asking, where do we have these disclosures stored and all? So now, if these are the financial statements, first one comes the trading account. To prepare trading account, then what do? You do your P&L account, and you get your profit. Then you prepare your balance sheet. You show all your liabilities, assets, and equity, everything. Then, in the end, you show notes to accounts. Okay. In this note, I told you also previously also this part. So in note 1, I will talk about PPE. So I will show the reconciliation. Opening May, how much is the balance? Then what are the additions I made? What are the disposals I made? What is the depreciation? Then closing balance. So this reconciliation I will show in my notes to account. Or if I have to talk about any other PPE, I will talk about in my notes to accounts. This is what is notes to accounts, or we can say this part is called disclosure. Okay. Now, same way you will do it for inventory also. Inventory card disclosures also we discussed, if you remember. So note 2, inventory. Here you will talk about inventory. What are the different, classifications of inventory? How did you value them? What are the methods you have used? Everything relating to inventory, you will show in. That is what disclosures means. In the end, how will you show your disclosures is what we will have to see. Yes, Aditi?
Ma'am, in the disclosures related to revalued assets, in that, what's that arm's length terms?
Arm's length means both the persons have to agree. You can't suppose you are selling it to a person. Suppose I am okay, I'm selling an asset to a person B. Okay, this is a known person to me. Like, this is a person who is almost like my friend. Okay, so you will sell him at a lower price.
Yeah.
Or if suppose that person is not known to you, you will sell it at a higher price, right? So this high low cannot happen. In arm's length means it should be according to the market price, that both the persons will be benefited. Both the persons should not be at a loss. If you sell it at a lower price, maybe this person will be benefited, but A will be at a loss, right? He is at profit, but you are at loss. Arm's length price means both the persons, person A and B, should not be at loss. Nobody should be at profit or loss. It should be like a fair price, we can say. Fair price between two persons is called arm's length price. Like I told you an example of what is a arm's length price. So how will you do it in revaluation is you will try to pick the revalued amount. Like I told you, how did you pick 12 lakhs? Okay, 12 I told that 12 lakhs, it is because one person in the market is ready to buy my asset for 12 lakhs. Okay, he will not be at a loss if he is buying at 12 lakhs. I'm not actually selling it, but that person is ready to buy it at 12 lakhs. That is why I have revalued my asset to 12 lakhs, because it is existing in the market. So that person is not at loss, even I am not at loss. That kind of a price is categorized as arm's length price. Okay. Done. I wanted to do the 16th question. It is because this question has almost covered, the recognition part, depreciation part, revaluation part, and derecognition part also. So whatever you have in a PPE will be covered in this 16th question. Rest of the questions are very easy, wherein, like whatever we have discussed, if there is a change in useful life, how will you revalue the asset, or how will you record for depreciation? This is the cost. I asked you to do this 12 and 13 already. These two are very simple, which talks about the revaluation or calculating depreciation. But if I cover 16, most of the PPE part will be covered. So I wanted to do this 16th question. Okay, let's read this question. I want everybody to do this solution along with me, because if you are lost, then you can't understand how we are doing it. So I want you all to concentrate on this question 16. Please look at the question once. While reading the question itself, let's put few points together and then we will do the solution. Okay. So Akshar Limited has installed a new plant. It is not a qualifying asset. This you will understand when we are discussing borrowing cost. Okay, this part you will understand when we are discussing borrowing cost. For now, you understand, since it is not a qualifying asset, interest will not be, or borrowing cost will not be capitalized. Okay, that part you remember for now. So we have installed a new plant as its production facility and incurred the following costs. So these are some costs that they have given you. Cost of the plant. Should you add this cost of plant? Should you add this cost of plant? Please keep responding in the chat box. I'll look at the chat box. It's fine. Should you? Yes, this should be taken up. Initial delivery and handling cost. Should we take this or no? Should we add it to the cost? Yes. Okay. Cost of site preparation. You just have to think whether it is needed for you to bring that asset to usage and your location. Is it needed? Yes. Site preparation, without that you can't build a plant or install a plant, right? So this is also needed. Initial delivery, because you have to bring to your location, or this is also needed. And then consultation fees for advice on acquisition of plant, this is also needed. Yes, because you are taking a consultation for the acquisition of plant. It is not after installation, it is before only. So yes, we have to take. Now, interest charges paid to the supplier against deferred credit. This part is only what I'm talking about, the borrowing cost. Okay, this will be clearly told in the borrowing cost. For now, we will say this will not be taken. Okay, this interest charge will not be added to your cost of the asset. Why? It is because it is not a qualifying asset. What is a qualifying asset? We will discuss there, because it will take so much time for you to tell you what is a qualifying asset, why we are adding or why we are not adding. Just for now, interest charges or any borrowing charges will not be added to the cost of the asset if it is a qualifying asset. For just that, you just understand that for now. Okay, what is the next one? Estimated dismantling and site restoration cost. Should you add this? Have you heard these words? Dismantling, restoration. Should you add these? Yes, we will have to. And what is the value you have to take? They told 50,000 we will incur after 10 years. But you can't add 50. What will you add? 30. Why? We will only add present value. No? Today, what is the value? In future, you have to pay 50,000. But today's value is 30,000. So I have to take today's value. Okay, agree. Next one is what? Operating losses before commercial production. We did an example also on this kind of an operating losses and operating expenses come. This cannot be added, right? Any operating costs, all these will not be taken to the cost of the asset, right? So with this, can you calculate the cost of the asset? Yes, because we know what are inclusions, what are what have to be excluded. With this, we can calculate the cost of the asset. Fine, but we still have other things given in the question. Let's also read that. The company identified motors installed in the plant as a separate component. Okay, I talked about separate component, if you remember, and a cost of 5 lakhs purchase price. Okay, and other costs were allocated to them proportionately. The company estimates the useful life of the plant and okay. Before going to this, now we are installing what? We are installing what? Plant. The question is, we are installing a plant. Different costs are involved in it. But they are talking about a particular component in that plant, which is a separate component, and the cost of that particular component is 5 lakh. What is that component? Motor. I'm just giving an example. Motor. And what is the cost of it? 5 lakhs. Are you all clear? Right? The cost of this is something X. We didn't calculate right now. We don't know the value because there are a lot of things that have to be added and deleted. So we don't know the exact value. We will do it. But they told that out of this portion, you also have a purchase price. Okay, I think the purchase price of this is there. So let us take that. What is the purchase price of the plant? 30 lakhs. Okay. So if plant completely was purchased for 30 lakhs, motor in that is 5 lakhs. This part is clear, everyone? Just give me a thumbs up. Okay. So I will provide depreciation for this plant separately and motor separately. Can we do this? Is this allowed in the standard? Yes. I clearly told you standard allows you to provide depreciation for separate components if the separate components value is identified separately. Here we are able to identify the value, so we can provide depreciation and you can record it also separately. But one more thing that they told us, along with this purchase price of 5 lakhs, you have purchase price of 30 lakhs, but you also have other costs involved here. So other costs also have to be proportionately given to the motor. That is what they're trying to tell you. We'll do that, don't worry. Okay. Now, what else is given? The company estimates the useful life of the plant and those of the motors as 10 years and 6 years, which means what is our question here? This plant will be depreciated for 10 years and motor will be depreciated for 6 years. This is very clearly given to us. Done. And which method have to be followed? SLM method of depreciation, which is very simple also. Now, at the end of year 4, after 4 years, not right now. Right now, what we will do, you will calculate the cost of the asset and record it in your books of accounts, start depreciating SLM method. After 4 years, what will you do? The company replaces the motor installed, motors that are installed, which means this component, whatever is there, that is replaced, it seems, with a cost of 6 lakh. So this is one important point. So this is replaced with 6 lakh replacement, and the estimated useful life of the new motors to be 5 years. Right? After 4 years, what happened? Now motor will be replaced with 6 lakhs. And what is the useful life from there? 5 more years. This is okay. Next, what happened? Also, the company revalued its entire class of fixed assets at the end of year 4, which means entire fixed assets class was revalued after year 4, after 4 years. What is the revalued amount? 25 lakhs is the revalued amount, it seems. Okay. The plant as a whole has 25 lakhs revalued amount. This is also fine. This is talking about the revaluation part. So this is one point, revaluation. Plant as a whole, this you should remember. And at the end of year 8, what happened? The company decides to retire the plant from active use and also disposed of the plant as a whole. Entire plant was disposed of at 6 lakh. Very good. They sold it. So this was replacement. And this was what? Revaluation. And what is this? Disposal. Can you see all together in a single question? But it happened at different years, not at the single year. That you should. But you try to understand the question first, then I think it's very clear. Now, there is no change in the dismantling or site restoration liability during the period of use, which means you don't have to change any values. You are required to explain how the above transaction would be accounted in accordance with AS 10, right? So they're asking you to record this transaction in all the ways. I mean, all the years you will have to record it. Did you understand the question first? What happened initially? I'm repeating, just listen. what happened initially? They gave you what are the costs involved in each one of them. Some are included, some are excluded. We know what should be included, what should be excluded. So you will try to calculate the cost. Later they told they want to have two separate components, not a single component, two separate components are required. So we are trying to split them into two. One is the plant and the other one is the machine. Done. We will split them and start providing depreciation for 10 years and 6 years respectively using SLM. That is also fine. After that, what we will do in year 4, you will have to replace the machine with 6 lakh, and year 4 you will have to revalue the asset also for 25 lakhs. Both have to be done at year 4. Okay. One, you will have to replace the motor because it is a major component, and other one is you have to revalue the amount also. When you're revaluing, obviously you will have revaluation surplus or revaluation loss. That we will see, don't worry. And at year 8, what you will do, you will have to sell the machinery, I mean sell the plant completely for 6 lakh. If you have any gain or loss on that disposal, that also have to be recorded. That's it. No other things are mentioned. You just have to record all these transactions. We'll start doing. I think once we start doing, then you will be more clear. Maybe now you might be having a vague idea of what is given in the question, but once we complete the question, I think you'll you'll have full clarity. I'll repeat it again after once we finish this. Let's start at least, because if I just talk about the question, you will not know what we are talking, what we are trying to do. So let us first do it. So what is the first one that we have to do? Calculating the cost. Yeah. So what is the first one? Cost of the plant. Are you all doing it with me? What is the cost of the plant? What is the cost of the plant? 30 lakhs. Can you see that? $30 lakhs, right? And what is the next one? Initial delivery and handling cost. $1 lakh. Next one is cost of site preparation. $2 lakhs. Next is consultation fee. $50,000. Next, interest charges we will not take. And then dismantling and present value of dismantling is 30,000. And operating losses we will not take. So what is the total cost? Cost of plant. $33 lakh 80,000. Is that right, everyone? Did you all get that answer? 33 lakh 80,000. Okay, done. Yeah. Okay, cool. Everybody got it. Fine. Now, if you look at this, they told that the separate component is identified, right? And what is the purchase price of that component? 5 lakhs. Now, see, I will try to split it here and show you clearly. The total plant as a whole is 30 lakhs. But they told that the motor ka purchase price is 5 lakhs, which means remaining component ka value will be how much? 25 lakhs. Everybody agrees to this? Plant as a whole purchase price is 30 lakhs, and they told that in that the motor ka purchase price is 5 lakhs, which means if you have to split them into two components, purchase price will be 5 lakhs and 25 lakhs. Is this clear? I want you all to respond. Otherwise, I will not know if you're understanding or not. Please respond. Yes. Okay. Now, okay, great. Great. You all are clear. Fine. Now, how much is this? Can I say, if I convert this into a percentage or a number, how much will be this percentage or a number? What will be the percentage? Out of the total, how much is the motor ka value? How much is the motor ka value of the out of the total? Which means just do 5 lakh divided by 30 lakh. How much is this? This calculate. 16.66%. Okay, fine. So can I do this? Can I do this? Can I take 33 lakh 80,000 into 16? You told 16.66%. No? Can I do this to get the cost of my motor? Total cost of my motor. Can I do this? Because they told these total costs also have to be proportionately adjusted, which means everything I will have to start splitting. Rather than doing this, I can split the total amount. No? So I'm splitting the total amount. Calculate this value. Five, six. I got different answers. Please check again. 563108. Is that right? Or I got one more answer also. Which one is right? Is 563108 right? Did everyone get that? 563108. Did everybody get that? Maybe because of rounding off, maybe you must have got that difference, I think. Because few got some 3. I think it is because of rounding off only. It is fine. It is because you must have taken 16.6 or you must have taken 16.66666. Accordingly, you will get the answer. Tell me the answer with 16.66666 and so on. What is that value? That value you tell me. Got it. I'm taking 333 only because most of you gave that answer. I'm taking that. So it is 5,63,333. Why did we get this, or why did we get this? It is because we have taken 66666 and some of you must have rounded off it. It is fine. Don't worry about that. Now, what is the value of plant? What is the value of plant? The remaining value. I'm asking about plant ka value. This value. This value. What is this value? Two eight 1,667. Did everyone get this? I think most of you gave the same answer. Okay. Yeah. So what did we do here? I actually know only the purchase price of a motor. So I thought that if this is divided as a separate component, the remaining plant ka component purchase value will be 25 lakhs. According I have split my total value. Instead of splitting all these costs separately, I split my total cost into this total plant and motor, two different components. Are we all clear with this? Yes or no? Yes. Okay, done. What is the journal entry you will post now? What is the journal entry? We will also write the journal entry. What will be the journal entry? Plant debit 281,667. Motor account debit 563333. Two, we don't know whether it is cash or bank, so I'm writing cash or bank. 30,80,000. This is the journal entry. Yes. How did we get this 28 lakh? Why so many of you did not understand? 33,80,000. You remove this part of motor. Remaining balance is this. This is balancing. When you have given a portion to motor, remaining portion will go to plant. No. Total cost is 33,80,000. I have given 5,63,000 to motor because they told me it is a small portion of component. So remaining balancing figure is your plant. So this journal entry is okay. Are we done calculating the cost of the asset? Yes, we have calculated the cost of the asset. We have recorded it in our books of accounts by posting a journal entry. Done. Now we will have to go for depreciation, right? Depreciation have to be provided for how many years? For how many years you will have to start providing depreciation? For 4 years. Because why 4 years? Because they told, you see this, if you see the question, at the end of year 4 they told, which means 4 years ka depreciation have to be provided. At the end of year 4 only all the revaluation and replacements, everything happened. So till year 4 you will have to start providing depreciation normally only. Correct? Okay, let us do this. Calculation of depreciation. Plant ka cost is 281,667 and motor ka cost is 56,3333. And useful life is also given to us. In the question itself, they gave you. What is the useful life? For plant, it is 10 years. For motor, it is 6 years. And they told we will have to use which method? SLM method, right? So what is the depreciation per year? Calculate the depreciation per year. Do it. You can do it. When you have cost, useful life, can we do depreciation? There is no residual value given to you. Calculate the depreciation for both plant and motor. I'm waiting for the answers. 28166.7 per year. And this will be 93,889. Is that right? That 93,889. Okay, you rounded it off. Let us round this also. We'll make it as 7. 281,667. Okay, I'm rounding both of them. Cool, everyone. Everybody is with me. Depreciation for 4 years. Alright, how to calculate depreciation also should I explain? How did you all get this? How did you all calculate this? By 6. And this is 281,667 by 10. Calculate the depreciation for 4 years. What is the depreciation for 4 years? How will you calculate? Each year ka depreciation into 4. Tell me the value. 11, 2, 668. Okay, and this one, motor ka? 37556. Is that right? 556. 556. Huh? Okay. 556 matlab 3,75,000. Is that right? Okay, done. Calculate the carrying amount now. Calculate the carrying amount at year 4. Carrying amount is nothing but the cost of the asset minus total depreciation till date. 1689, right? 999. Okay. 16 lakhs. And 281,667. Hope I'm right. Oh my god, I got a different answer. Please check. Please check which is right. Motor, I think people are saying it is a different answer. So this is wrong then? I think motor people are giving a different answer. 18,777,777. Is this right? Motor is right. This one is right. The plant is correct. 16,89,000. Is that right? I think this we can round it off to 16,90,000 also. Yeah, let us round this off to 16,90,000. Both are right now. 16,90,000 and 1,87,777. Done. Okay. We just have calculated the carrying amounts, but then they told you that one was revalued, one was replaced, and all those things. So let's see what will be the effect now. Okay. Now, what happened to the motor? What happened to the motor? Motor was replaced with 6 lakhs. Can you see that? Motor was replaced with a cost of. Please bear with me for 5 more minutes. I think we will be done. I will close this because I don't want to stop this question in between. I'm continuing. So let us finish this question and then we'll stop. Yeah. So the motors installed, I mean, they are replacing the motor with a cost of 6 lakhs. So what will you do with the 6 lakh now? Whatever carrying amount you have now, this carrying amount will be taken to your P&L statement. This will be, I mean, de-recognized. We can say that. Now, this motor is replaced, correct? What will happen? This 1,87,777 will be de-recognized. Okay. Which means I will remove this value in my books of accounts. Now, new motor value is how much? 6 lakh. This 6 lakh, we will start depreciating. Start depreciation. And what is the useful life? They told new motor will have a useful life of 5 years. So start depreciating for the next 5 years. Start depreciating for next year. So what will be the depreciation? What happened? Some are saying 8,999. It is fine. No, for 1 rupee, why are you worrying so much? You got 16,89,999. Okay, I just rounded it off to 16,90,000. You don't want to leave it. You take 16,89,000 only. For 1 rupee, don't worry, please. Because of that, don't take too much pressure. It is fine. Okay. So the new motor will be depreciated for the next 5 years. What will be the depreciation of this new motor? 6 lakh divided by 5. Divided by 5. This will be 1,20,000. Done. So what did you do with the motor? An old motor was replaced with new one. So what did we do? We have de-recognized the old one. This was the old one. Carrying amount of the old one was this. So this was de-recognized. Later new one was recognized. And then new one will be having a useful life of 5 years. So you start depreciating that for 5 years. Is this motor thing of one fine? Old one is de-recognized, new one is recognized, and then again depreciation will normally continue. Hope this is clear. Just give me a thumbs up so that I'll move to the plant. Motor is clear. We depreciated for 4 years. At the end of year 4, you have replaced it. So I de-recognized the old one, recognized the new one. Done. Okay, fine. Everybody got it. Now we are moving to the motor one, which is revalue, right? So what happened here? They have revalued the entire class. They told they have revalued entire class. Plant as a whole has how much? 25 lakhs revalued amount. 25 lakhs is for plant as a whole. Now, out of that 25 lakhs, already 6 lakhs was shown where for motor, no? So, when you say revalued amount, it is 6 lakh here. So, it will be only 19 lakhs here for the plant. Why? Because total revalued amount is 25 lakhs, plant as a whole. They told plant as a whole. So since we have already taken the replacement of 6 lakhs as the motor value, I can only take 19 lakhs as my plant ka revalued amount. This part is clear why I have taken 19 lakhs, everyone. Why I have taken 19 lakhs, is that clear? Because since 6 lakhs was already shown in motor, only 19 lakhs is shown here. Great, understood? Fine, okay. Now, we have 19 lakhs as revalued amount. And what is our carrying amount? What is our carrying amount at year 4? 16 lakh 90,000. So do we have a revaluation gain or loss? Calculate revaluation gain or loss. Gain, huh? Okay, how much is the gain? Gain is 2,10,000. Okay. This part is clear now? This part is clear? Done. Okay. 2,10,000 is the revaluation gain. So what will you do here? After year 5, from year 5, what will be your depreciation? What will be your depreciation here? 19 lakhs divided by what is the useful life? What is the useful life? The total useful life is 10 years. Already 4 years are done. So 6 more years. And here 6 lakhs is the new value of motor, and they told 5 more years. That's it. This is the new depreciation. Calculate the new depreciation from year 5. Yes. So calculate the depreciations. This is, I think this we already calculated, 1,20,000. And what is this? 19 lakhs ka 3 lakh 16 660. I'm rounding it off to 667. Okay. Someone writing in decimal, so I rounded it off. Till here clear? Till here clear, no? Yeah. So we have revalued one asset and then we have replaced one asset. Both together we have calculated what is the new depreciation with the remaining useful life. Now this is also done. What else is left? The last part of the question, they told that at year 8, after 4 more years, what happened? They sold plant as a whole for 6 lakhs. So what will happen now? Now we are going to see the disposal part. Okay. We have plant and we have motor also. What is the carrying amount at year 4? And then you have to provide depreciation for year 5 to year 8. Then you will get your carrying amount at year 8. Yes. So what is the carrying amount of this? Is 19 lakhs. and this is 6 lakh. Calculate the depreciation for 4 years. No, you already know what is the new depreciation. Calculate that for 4 years from year 5 to 8. This will be 3 lakhs. 3 lakh 6,667 into 4, and this will be 1,20,000 into 4. Tell me the values, no? Fast, please. Plant, it is 12 lakh 6,668. Okay. And here it is 4 lakh 80. This is 4 lakh 80. Then carrying value will be 1 lakh 20 at the end of year 8. And what is the carrying value of plant? Carrying value of plant, calculate that also, please. 6,333. 6,33,332. And this is 1 lakh 20. Got it? Okay. You got carrying amount at year 8. Now, did we sell only plant or did we sell only motor? No. They told that in the question it is mentioned that plant as a whole is sold, which means both are sold together for 6 lakh. Now we know the value separately, no? How can you split them? You split this into the same carrying lakh. I will split in the same carrying value ka order, which means 6 lakh have to be split into 6,33332 divided by, together what is the carrying value? Total carrying value is how much? So divided by 75332. Here also 6 lakh into 1,20,000 divided by 753332. What did I do here? I was taking the proportionate value, right? Since I don't know how to break it up, how did I break it up? Using the carrying value. The total carrying value is 7 lakh 332. So I have taken this as a base and I'm going to split the disposal values. Yeah, what is the disposal value? Split them. 5 lakh 4 plant, okay. 5 lakh 4 4,422, okay. And this one, you might get some decimals difference if you're taking them, rounding it off and all those. Yeah, just tell me. 95 575. Okay, got it. So this is the value. Now, gain or loss on disposal. Calculate if it is gain or loss on disposal also. Fast. Gain or loss on disposal. Loss. Both are loss? Oh yeah, I think both are loss. Yeah. Tell me. How much is the loss? I want loss. Motor, it is 24425. Okay, what about plant? Plant ka loss. One two eight 910. 1,28,910. Okay. Some decimals difference, rounding off difference is fine. We are done. Okay. So look at the entire question. Look at the entire question. Now, first thing is the cost of the plant, right? We have calculated the cost of the plant and motor separately. We posted the journal entry. This is done. Then later what happened? We saw what is the depreciation for 4 years. And after 4 years, what is the carrying value we have seen. And motor, though, we have de-recognized one and recognized the other one and started providing depreciation. And the plant, we have revalued and we have seen whether it is a revaluation gain or loss. Now this 2,10,000, what will happen to this 2,10,000 revaluation gain? It will go to your revaluation surplus under your equity. Everybody knows that, no? Yes. And then when once it is disposed of, you will see what is the carrying amount at the date of disposal, and that is compared with the disposable value or disposable proceeds. And then you will see whether it is gain or loss on this. these two will go to P&L statement. We know that any gain or loss on disposal has to go to P&L statement, and any revaluation gain or surplus will go to revaluation surplus account, right? Now, one more last thing that I have to tell you: this 2,10,000, this 2,10,000, it is there in your owner's equity. Last point. This 2,10,000 is there in your owner's equity, correct? As revaluation surplus 2,10,000. Now, do you have this asset after year 8? Now we are at year 8. After year 8, this asset is no more there. Then you can't hold this revaluation surplus anymore. Then what will you do is you will transfer this to retained earnings account. This is one last point you should know. This should be transferred to retained earnings. Where will this retained earnings be there? It will still be there in owner's equity only. Na? Just the heading is changing. It is changing from revaluation surplus to retained earnings heading. That's it. Why are we changing it to retained earnings heading? It is because the asset is no more there. It should be considered as that surplus transferred to retained earnings. That's it. Since the asset is no more there, you can't revalue surplus account anymore. You will have to transfer it to retained. This one last point you will have to remember. When will you do this transfer to retained earnings? It is only when you have disposed of that asset. If the asset is there with you, you can't transfer to retained earnings, because we know that we will have to adjust the losses. No, when we have losses, we will have to adjust it, right? So this is one important point. When you're disposing it off only, the head have to move from revaluation surplus to retained earnings. Otherwise, it will retain in the same way. That's it, right? I think this question covered all of them, right? This question covered all of them. Most of the question, revaluation part, the depreciation part we covered, and then we also covered how retained earnings and all that will be adjusted. Remaining questions I want you all to try. These are very simple. You don't have much adjustments in other questions. Very simple questions they are. I want you all to try other questions. So what I will do in the next classes, I will just do a summary of PPE standard. We will do a chart kind of thing for the PPE standard so that we cover all the points in a single chart. We'll do that first in the next class. And I think remaining questions you can try. If you have any doubts, we will discuss in the end in the next class. But I want you all to try all the remaining questions as an assignment for today, right? Okay. Any questions, I'll take it up in the next class when we are closing the PP. We will take it up. But you have to try first. If you can't try, then it is very difficult. Okay. Other questions are easy, so I want you all to please try. Yes. So I'm closing for today. Technical team, can we close? Technical team? Can we close? Can we close?